Hello and welcome to BQ Prime. You're watching this special on with the management of Larsen and Tubro. They came out with a very good set of numbers, especially the order inflows have been very good for this quarter for them. And joining me is our Shankar Raman, who's a whole-time director and CFO at L&T. Mr. Raman, thank you very much for joining us on BQ Prime. My first question to you is on the order inflow. 50%, 57% jump year on year for the quarter. Uh, can you break down this order inflow for us, and how much, what percentage could have been spillover from Q4 to Q1?
Uh, Good evening. The order inflow of 65,000 crores needs to be broken up into those which are contributed by infrastructure sector, which is about 40,000 crores. About 7,000 crores came from hydrocarbon sector, and the rest, these two are the larger pieces out of that. The rest came scattered across various other sectors. Among the infrastructure sector, the heavy civil sector subsector that we cater to was the beneficiary of a large order in the high-speed rail segment. The other large piece of order from infrastructure sector came from power transmission and distribution business, where we won a large order from Middle East for solar energy. We also won some hydrocarbon orders both in India on the onshore as well as offshore. And we also won an order in Middle East, in Saudi Arabia, for a offshore facility. So I think these are the broad components. All the businesses procured orders, be it buildings and factories, being minerals, metals, being water, heavy engineering, defense engineering, all of them procured orders. And fortunately, all of them did better than what they did in the first quarter of the last year collectively. But if you want to isolate the big wins within this, the high-speed rail and the solar orders actually take the cake.
And what would have been any spillover? Is there a spillover from Q4 to Q1? Something you expected in Q4 but got spilled over to Q1?
Actually, we have cases of both spillover that happened as well as spillover continuing. For example, some of the defense orders spilled over from Q4 to Q1 and are spilling over to Q2 as well. So the timeline that the sponsors of these projects work does not necessarily coincide with the calendar that we have on the quarterly cutoffs. But what is important for us is the program alive? Is the program cancelled? And the good news is that if we can withstand the quarterly spillages, the program is alive and kicking. So hopefully in one of the quarters, including the current quarter, we should see some benefit. This slippage between quarters has been a normal thing that is happening in project business for long now. For example, the high-speed rail program. The program itself is slightly delayed. I think the COVID interruption was a major reason for that delay. So working to the original plan, the wins that we have had in Q1 of the current year could have been Q3 or Q2 of the previous year. So to that extent, I think if the overall program gets deferred, pushed to the right, our participation also gets pushed to the right. So hard to say as to this is the exact order that I targeted last quarter that came in this quarter. In the infrastructure space, which is medley of orders, there's always a mix of this churning cycle. And I guess so long as we are adequately compensated by orders that were not expected to come in the current quarter, for the orders that gets missed, either because you lose them or the program gets deferred, we're okay. We're okay. But I think the more important theme to my mind is the momentum. I think individual orders, we win and we lose. For example, our win rate is typically around 20%. So for every 5 projects that we bid, maybe 1 or maybe 2 projects that we win. So obviously the system is geared for losing 3. So the order loss has not been anything exceptional in this quarter, which is good news for us, so that we have not got any less competitive or less eligible. And the momentum has been sufficiently good so that we could afford to take the slippages of projects deferred on our stride and yet report good numbers. So
I asked
environment,
that.
I think.
I asked that question because you had a you have a guidance of 10 to 12% growth on your order book. With the Q1 order book, I was reading one of the Jeffries report, if I'm not wrong. It said that you just need 2% more for in the next 9 months to reach that guidance. So that is the case. I just wanted to get an idea whether should we look at the order book on a normalized basis and then look at the 10 to 12% guidance, or you will go ahead and increase your guidance maybe in the second quarter or third quarter.
Sajid, the way I am looking at it and the way the company is looking at it is we reported 230,000 crores of fresh orders last year, FY23. And we guided the market that 10 to 12% growth is what we are working on for FY24. So that would possibly take the 230,000 crore to somewhere between 250 and 260,000 crores. Now, of which 65,000 crores is what we have won. We have another lakh and 95,000, and for ease of understanding, let me say another 2 lakh crore worth of orders to be obtained. Now, mathematically, instead of working on percentages and possibly feeling complacent, what the company is focusing on, where is my next 2 lakh crore of incremental orders going to come from? And which are the projects that are lined up? Which quarter are they lined up? Who's the competition? What is our reason to win? There must be a right to win also. Is it going to be price point? Is it going to be technology? Should we partner with somebody? Should we prepare the ecosystem to partner with us as we bid? So
Yeah.
all of this actually results finally in the orders that we bag. So to that extent, I would possibly like to look at it as we need another 3 good quarters, including the current quarter, including the current quarter. We need
Mm.
3 good quarters to be able to feel safe and secure that we are on course with the guidance, which is the reason why I didn't want
Yeah.
to react on a particular quarter, because this 57%, 60%, while they are impressive per se, can also be the function of the position last year because these are relative. I would like to
Mm.
focus on absolute and focus on what exactly we need to do to reach the goalpost rather than draw some comfort. And the risk with this is that we don't want to slip into complacency.
Give me a sense of the macroeconomic conditions which is coming in, and the kind of prospective pipeline that you see, because we are going into a year where I think elections are going to come in various states, and towards the end of the financial year, the country would be preparing for the general elections also. Uh, if you look that in put that in perspective with the kind of international orders that you're winning, means 45% coming from hydrocarbon for you, we're seeing a shift globally from fossil fuel to renewable, but you're still getting a huge amount of hydrocarbon orders coming in. Uh, Give me a perspective of how this is functioning and how this is playing out globally.
One data point correction, Sajit, if I may. Hydrocarbon won about 7,000 crores of
Yeah,
orders in quarter 1. And out of 7,000 crores, about 2,500 crores was international orders. The balance was domestic. So
okay,
the domestic happened to be more. But if I take the order book as a whole,
yeah,
of hydrocarbon, which is close to about 70,000 crores. Nearly 60% of that order book is international. So you are right in a way that there is a lot of international orders to be executed in hydrocarbon. And to that extent, the wins that we are having in the area of power transmission distribution, including the solar energy, is a good antidote to any potential slowdown in the domestic. And those programs seems to be multi-year program and multi-billion dollar program. So our engagement with that program will continue for some years going forward. So that's the good part of it. Coming back to India, I think in the last few years, no year have we gone through without an election in some state or the other. We've
mm,
always been having 2, 3 states coming up for elections every year. particularly in the last cycle, if you see. So state elections, I think we are getting used to the cycle. And union election, of course, is a big one, and it could be policy defining because we've had the benefit of continuity of government over the last 10 years. So to that extent, when the last election happened in 2019, there was not much risk to disruption of policies. So big programs that were unleashed, be it the dedicated freight corridor or the high speed rail, was not at a risk of disruption. Continuity was there. Now, we have to wait and watch as to how the nation votes and whether there is going to be the same government, different government, etc. And the risk of a different government is there would be a pause before proceeding because most of these projects will go through some review, both from a viability perspective as well as from priority perspective. And that's one risk we run. We can't hide away from it. We'll have to hope for the best. But in terms of general theme, I find across political parties the need to feed population, the need to keep the nation in a positive frame of mind is well understood. So, agnostic to political ideologies, I do think that providing resources to people is given. Some ideologies believe in giving it free, some ideologies giving it efficiently and charging for it. So we'll have to wait and watch as to which one plays out. But regardless, given the state of infrastructure in the country, given the fact that we have to take growth more and more deeper into India, it cannot be that only 6 to 8 cities in the country provide employment opportunities. I think it will be impossible for those cities to function. So the need to develop alternate hubs for employment generation is given. Now the question is how we are going to make this program viable. We have to make sure that goods, people, and all the related stuff, we establish good, efficient means of mobility. One reason why the government possibly is investing in roadways, railways, and all the network that is doing is both the need as well as the international firms, the funding agencies, are very supportive of broadening the growth opportunities within the country. I think today there is not much questioning about does India hold potential. I think
Yeah.
everybody believes India holds potential. The only question that in mind is will we have the right policy prescription, right environment, right enablers to realize the potential. So the infra funders, which are global agencies, have come forward, and that's a big plus for the government, whichever be the government, because doing it out of country's budget has its own limitations. When you
True.
have these very long gestation, low interest cost credit, I think it enables the projects to move forward. I do believe some of the large metro rail program that we have been able to execute, the high speed rail, the freight
Yeah.
corridor, have all happened on the back of this kind of credit lines. So it's important if the governments, whichever the government is, wants to be seen as inclusive, successful, employment generating, then they have to stay on the right side of these funding agencies. And that can happen only through credible large programs. It is in a way self-fulfilling because the large funding agencies also supervise the program. So the
True.
chances of good oversight improves rather than leaving it to just local contractors or local municipalities to oversee. Secondly, I think some of the learnings out of the past 10, 20 years have also started being built into project specifications today. Today, they say that 70 to 80% of the right of way will be acquired before a project is put out for bidding. That's a big development from what we used to see 20 years ago, where we have to just go into the project blindfolded. We wouldn't know whether we will get the next mile connected at all. So there are a lot of project risks, a lot of construction risks. Some of them have been
So how,
addressed.
so how
Uh,
so if you look at the year ahead, would you see that execution will be the biggest challenge for you to in the next 9 months going ahead, while you look for the next 2 lakh crores of orders as well, but execution would be the key focus
uh, uh, Spot on. Not only next 9 months. I think if you look
and
at the
thereafter as well.
company,
Yeah, but yeah.
look at the company a little long term. It's one thing to get 4 lakh crore, 5 lakh crores of order book, but we need to execute it well. And we can never afford to slip up on execution because much of the pre-qualification, hopefully, will ride on successful completion track record. In fact, it is a cost that we are propagating with all the authorities because the cost of infrastructure goes up because the time overrun is rampant. People
mm,
take double the time than what is anticipated.
mm,
Consequently, the interest during construction goes up. So the project which starts as 100 rupees, let's say, as project cost, lands
mm.
up very easily at 180 rupees, 200 rupees, and it exceeds the budget and busts the viability. So
Do you see
the
any
risk.
headwind to that? Yeah, you're talking about
No,
it.
no, I think it's not so much of an headwind. I think it is going to be a constant endeavor to stay ahead of the curve on this. And it is easily said than done because I think every project, despite all the improvements that I just cited as having happened, still
Mm.
requires multiple agencies, clearances, etc. We're still not there on single window clearance. Now, does
And
the
how do
project
you
come?
and how do you look at the margins, core margins in this whole execution? Because you are looking at core margins of approximately 9% and above. Uh, while you're executing this, how are you placed as far as getting those margins in?
Two things will have to play well. One is we need to crash the time to complete the projects. Today, we are taking X number of months to complete a project. We should figure out a way to do it X minus 3, X minus 6 months. That's one effort, and that can happen by superior engineering, planned procurement, etc., etc. That is very much up our alley in the sense that it is internal, controllable, and we have to engineer that.
Mm,
The other part is the resources availability. You see, we can have the best of plans, but we need people to execute.
mm,
Skill shortage is becoming a concern as our order book grows. I think it was okay to have 2 lakh order book and feel comfortable that we have enough skilled workmen to execute them. When it becomes 4 lakhs, when it becomes 6 lakhs, then it's a different proposition altogether. So as the scale of the operations increase, the skill pool has to increase. Today, one of the concerns is how do you expand on the skill pool? And that's again a challenge which will take time to solve because these doesn't get developed overnight. You have to work with this pool of people and make them convert them from semi-skilled to fully skilled or unskilled to semi-skilled. So these two are the biggest, according to me, challenges that we have, and that goes beyond the current 9 months. And I wouldn't like to call them as headwinds because headwinds means the wind direction can change and things can become normal. These are some things that we have to work on constantly to make sure that we have the right to win the next project.
okay. I need to spend few minutes on your buyback as well. You came out
Yep.
with a 10,000 crore buyback. Uh, uh, what was the thought behind this buyback? Because we saw that happening a few couple of years back, and there was some changes required in the regulatory framework, and that is now in place for you to
Mm.
bring this in. But 10,000 crores, will you be able to bring in enough of operating free cash flows to manage this 10,000 crore buyback?
In fact, it is accumulation of past few years cash flow that we are distributing. The purpose behind buyback is to distribute to shareholders the profits that we have made with the money that they've entrusted with us for the first lot. So it's a way of dividend, if you can call that. Except that dividend has a certain ring to it on an annualized basis. So you
Hmm.
can't 1 year go to 500%, next year go to 50%, third year goes to 75%. It becomes very erratic. We believe
Hmm.
in the philosophy of a steady growth in dividend. And today, almost 40-45% of the profits that we earn on year basis is given out as dividend. So we are turning out to be a good dividend stock. What this buyback will do is once in a while, when you accumulate surpluses beyond what you need for your growth, then instead of safekeeping that surplus and acting like a bank, we might give it to the shareholders, make them feel wealthy, create value for them, and they're always free to use this money to come back and invest again. The whole idea of the concept, not the idea, the concept behind premium on buyback is to provide those opportunities to shareholders. If you're a holder of shares and you give your shares participate in the buyback program, and the company buys it as a premium to the current price, you get the premium. And then if you are in love with the company, you can reinvest and reinvest at a
Okay.
price possibly lower than the amount that you bought back, sold the shares back for. Over time, the prices will levelize, but there will be these windows of opportunity. So I think from
So
a shareholder perspective, it's a very interesting way to get some returns going. And we do believe that it will be shareholder value accretive move.
my final question is that, how does this place your working capital management as well? Because if you're sitting on a huge order book as well, and which requires a lot of working capital, and you've been trying to manage that for a couple of years, bringing down the cycle as well. Uh, how does this change, or is it factored in the entire scheme?
In the cash flow, we have factored in the incremental working capital that we might have to spend on, incremental capital expenditure that we might have to spend on, investments that we have make in electrolyzer manufacturing or data center building. We have taken all of that into account, and we are still left with net surplus, which is a portion of that is what we are sharing with the shareholders. I do believe in a couple of years we should be able to recoup the distribution that we have made back to where we are pre-buyback in terms of financial liquidity.
Okay.
But then we have to make sure that the working capital, which you have brought down considerably from 25-26% of revenue, we brought it down to 16-17% level. We should
Yeah.
continue to be as efficient, and we should not invest or allocate capital indiscreetly to assets or investments which are not going to be return accretive. So all those discipline and guardrails we'll have to do. If we do that and do the business well, for which we have the order book, we should be able to recoup this capital in about a couple of years' time. And that's the confidence with which we are doing this.
Mr. Raman, it was a pleasure talking to you today. Thank you very much for joining us on Beekeeper.
Thank, thank you. All the best.
Thank you.